Morning, everyone. Thank you for joining our webinar today about the compliance changes, rates and thresholds, and MTD for ITSA. Update of what's coming in from April 2026. Just a bit of housekeeping. I'm not expecting our fire alarm to go off. So if it does, this will be brought to an end very quickly. With reference to recording of this session, it will be recorded and posted up to our YouTube page, which we will then send a link out for you to be able to view at your leisure, because it's going to be quite a bit of information that not everyone's going to be able to sink in straight away. So let me get started with the presentation. So the first Sorry, my mic got muted then. I'm not sure what happened there. So just to go through rates and thresholds for PAYE, budget changes come into effect from April 2026. So these were the budgets that were introduced from November last year. Companies house changes. So this is more for limited companies and what changes have happened with companies house and what's potentially going to come into fruition going forward. Employment law changes. So again, this is for employees, the different rules that are coming into place from April 2026 and 2027. We've got MTD for self-employed and landlords. So just talking about that in general. I did a webinar in December really specifically around that, but I will recover it again because it's obviously starting from April of this year. And then we've got the Renters Reform Bill. So just points on that of what's coming in for landlords with reference to the changes in the rules with the relationship of tenants and landlords. So let's get on to rates and thresholds for 26-27. So these are national minimum wages for the 26-27 year. To give you an idea, the 21 and over has gone up by 4% from the previous year. So in the previous year, it was £12.21 an hour. It's now £12.71 an hour. 18 to 20 has gone up by 8.75%. Last year, it was £10 an hour. And from April 26, it's £10.85 as per the screen. And then under 18s and apprentices, as it says in there, is £8 an hour. That's a 6% increase from the previous tax year, where it was £7.55 an hour. So these are obviously increasing. These were announced in the budget that these were increasing. So that's what the new minimum rates are going to be for any members of staff that are on minimum wage, depending on their age, and take them from there. We'll then move on to the statutory pay rate. So this is now more to do with maternity, paternity, adoption, as you can see. They are gone up by basically an average of 3.8% compared to the previous year. So as you can see, with maternity pay on the remaining weeks is £194.32 per week, or 90% of the average weekly earnings, whichever is lower. Last year it was £187.18 per week, or 90%. Same with paternity pay, adoption pay is again 90% of weekly earnings for the first 6 weeks. Remaining weeks, again, it's exactly the same. There's been no change there. The amount you can recover if you have any of these based on your national insurance contributions, as you can see, if it's above 45,000 for the previous tax year, you can only claim 92% of this. If it's lower than 45,000 a year of employer and employee contributions, you get 109% back. So you actually get a little bit more than what you pay out. With reference to statutory sick pay, statutory sick pay rate has gone to £123.25, or 80%, whichever is lower. That is again a 3.8% increase from £118.75 per week in the previous tax year. The amount of SSP, as it says there. It depends on how many days they work. So it's worked on a daily rate now. So if they work 5 days a week, it's 123.25 divided by 5. Or if they work 6, it's divided by 6. And it's done on the first day of illness. So this is one of the changes that are coming into effect, where there used to be generally a 3-day waiting period. It's now a day one payment of illness. Still have to go through your employee handbook with reference to the rules around sickness, doctor's notes and everything else. But yeah, it's now a day one. There's none of that 3-day waiting qualifying period. Employment allowance. So this is for the employers. That still remains the same of the £10,500 that you get from the government if you qualify for the employment allowance, which they will then utilise that to pay a national insurance. This is to cover employer and employer national insurance. So it covers that aspect of it, but it's still the same as the previous year. That has not changed. So we're now going to go on to the budget changes. So budget changes come into effect from April. So these are everything that Rachel Reeves announced in November 2025. Some are coming in from 2026. Some are coming in 2027. I've really sort of targeted the ones that are coming into effect from April 2026. We can obviously cover the ones coming from April 27. I can just cover them very loosely verbally, but obviously when we do another one of these webinars a bit close to that time, that's when we will obviously really put them down on paper. So dividend taxes are being increased by 2%. So we're currently in the 25-26 year. They're charged at 8.75%. If you're in the 20% tax bracket, they're going up to 10.75% as it states there. And then if you are a 40% taxpayer or higher rate taxpayer, they're increasing from 33.75 to 35.75. If you're an additional rate taxpayer, that doesn't change. That still sets at 38.25%. So that hasn't changed. So this was trying to get more income from directors and the dividends that they get from obviously running their business. So that's what the dividend increase is. There's been no decrease in the allowance that you get a year, which is very minimal anyway. There's been no decrease in that. The next one is business asset disposal relief. So this is if you sell your shares in a business, you would have to pay capital gains tax on it. It used to be called entrepreneurs relief going back some years. They've increased the CGT rate on it from 14% to 18%. You do have an allowance or a relief based on the value of up to £1 million. That gets calculated at the lower percentage. But generally, business asset disposal relief for CGT is increasing by 4%. The next one I've got on the page is business rates for retail, hospitality and leisure. So if you're in a retail shop or you're part of the hospitality and leisure industry, they're using lower multipliers for business rates, as it states there. So if a value is under 500,000, they'll use 38.2p for the pound, and for properties, sorry, let me rephrase. 38.2p per pound for property rateable value of anything below 51,000, and then it's 43p or 43% for properties valued between 51 and 499. If it's over 500,000, there's no lower multipliers. It's still the same as before. This is trying to help get the high street not being as expensive to run, because obviously they're seeing a dwindling effect in the high street with reference to small businesses and everything else. So they're trying to make it a little bit easier for businesses with reference to business rates. You still can get business rates relief, small business rates relief, depending on the size and the rateable value. But yeah, it's trying to help that aspect of it. The next one is child benefit removal of the 2-child cap. Now, this is in relation to the universal credit element, not child benefit that you would get. So there's been a 2-child cap in the universal credit. That's been removed. So then your universal credit will increase based on how many children you have, and it's not capped at 2. So this again was announced in November 2025. With reference to that, it was a big thing for the Labour budget of this, moving a lot of children hopefully out of poverty, and increasing their the ability to, obviously, for the parents to lead a decent life, and not being hamstrung by that. The last one is full state pension to increase by £575. Now, that's a full state pension will increase by £575 a year from April 2026. If you haven't got a full state pension, it will be then prorated down. But this does increase and will make more people pay tax on their state pension, because the state pension is for some people will be potentially higher than what their tax-free allowance is. So it's just understanding that they will not take tax off you for this. They will reduce your tax-free allowance to counteract it. So you might find that you're getting coding notices through from HMRC with reference to your PO, sort of your pension income. If you have pensions elsewhere apart from the state pension, it will increase the tax that you will pay on those pensions. So just be mindful of that as well. With reference to stuff that's not on here, that's coming in sort of in beyond 2026, is there is going to be an increase on taxes for rental income, a 2% increase that's coming in from 2027. So if you are a basic rate taxpayer where you would pay 20%, it's now going to come to 22%. And then if you're a 40% taxpayer, it's going to be 42%. But that's not coming into effect until 2027, with reference to the budget changes. There are other budget changes coming into effect, but these are really the main ones, along with the national minimum wage. The employment allowance hasn't changed. With reference to the employment allowance not changing, people that are on a director salary, that hasn't changed, because there's been no increase in the thresholds with reference to the personal tax allowance. So going on from there, Companies House changes. So this is really for more the directors that run a limited company, but also if you're looking to run a limited company, it'll be obviously handy to know. The first one is the confirmation statement fee has increased to £50. This has already happened. It happened from February, I believe, which is a second increase in about 2 years. It was £13 and then got increased to £34, and now it's gone up to £50. So a confirmation statement fee is now £50. ID verification, and this is something I do want to really touch upon, because I have had a lot of conversations with people on this. So this started in November 2025. It was announced a while ago with reference to ID verification for directors and people of significant control. What this is Companies House are trying to tidy up directors and companies where there's a lot of companies that are not legitimate, and there's directors there that are trying to do a bit of skullduggery. And this is about making sure that if people are directors of companies, that they've able to be verified that they are. Now, when this was coming into fruition, starting in November 2025, there was this big thing that announced of ID cards, and the two have been intertwined. Now, I can categorically state now, this is nothing to do with ID cards. What this process is we, as your accountants, have to do an AML check. We have to make sure that you are who you say you are. It's part of our regulatory process. Now, with reference to Companies House, all they're asking for from us is, have you verified this director's ID? And we say, yes, we have. And here's the information that we've used. We do not send copies of your ID to them. We will literally provide them with, like, i.e. the passport number or the driving license number, which are government issued anyway, to say this is what we've seen, these are the details we've used, and it's this person. You will then get, we have to put your email address in, which you'll then get your own personal code for. Once that personal code has been provided to you, you provide it to us, we put it on our system, it then verifies you. Now, if you wanted to start a new limited company, this would need to be done before you can form the limited company, with reference to this Companies House personal code and this ID verification. So going forward, there is going to be no way to start a limited company without this process going through. So that's the big thing about ID verification. There's a lot of people that don't want to do it because they believe it's to do with ID cards. I can categorically tell you now, nothing to do with ID cards. They are literally asking for your ID to be verified via government registered ID, that you have a passport and a driving license. We can do that on your behalf. We can manage that, but we have to do an AML check anyway. And there's nothing that's scanned and emailed to Companies House to say this is it. It's us just putting that detail in. So I just want to make that very clear, because there's been quite a few conversations we've had with clients around this. The next one on there is there has been a proposal for annual accounts to be filed through software. Now, this originally was due to start in April 2027. They have delayed it due to consultation. So what they're looking to do is stop people filing accounts directly on their website, which you could do, and you still can at this moment in time, or sending paper copies in. This is a movement towards, with everything going to a digitized tax system, this is something that they're looking to go towards with reference to this as well. But like I said, they have delayed it. But we file all the limited company accounts we file through software anyway. So this doesn't really affect us. This is more if people were doing their own and filing it directly on Companies House's website. This is also to make sure that accounts are accurate with reference to what they're being put under, with reference to a balance sheet item or a profit and loss. It's just making sure that they're accurate. And the last thing on there was, as part of this consultation with reference to going through software, they did state that they wanted profit and loss reports to be filed with the accounts and will be available on public record. Again, this has been delayed from the original start date of April 2027. So what that means is, right now, when we file a set of accounts, we file what we call an abridged version or affiliated version, which basically just shows very, very minimal detail. It basically shows the balance sheet items of a set of accounts, which are money in the bank, who the debtors are, so who people owe you money, who you owe money to, if there's any money owed over a year, so if there's any loans or anything like that, so any liabilities as well as the assets. That's all that's currently filed for small companies. What they're looking to do is to change that, and for it to be a bit more transparent of, this is what their turnover was, these are what their expenses was. I have my own thoughts on it, that it could potentially cause a lot of issues with reference to small companies. Unfortunately, it's a rule coming in with Companies House, but like I said, they've delayed it due to potentially quite a bit of backlash from the small business community about it. If you are audit, you have to do that anyway, but you're not. All of our clients are not audit companies, so this has potentially been a lot of backlash from the small business community to Companies House, and this is why they're now still having it under consultation. So they have delayed it. If there's any changes, we'll obviously let you know with reference to it, so you can obviously be fully aware of what's coming in and what it means for you. So the next thing we're going to talk about is employment law changes. So there's been a lot made of employment law changes coming into effect from April 2026 with the employment reform bill and everything else. And as you can see here, ones that are starting from April, October, and there is another slide with all the other ones that are coming in 2027. I just want to pick out certain ones just to give you an idea of what they are. So where it says day one parental leave and unpaid leave, what this does is this removes the current 26-week for paternity leave and 1 year service requirement for parental leave, enabling fathers and partners to take up to 2 weeks paternity leave or 18 weeks paid leave from day one. So you could employ someone to come into your workplace as an employee, and they can turn around and day one and go, I'm taking 2 weeks paternity leave because my wife just had a baby. Whereas before it would be that they would need to have 26 weeks of service before they could request that leave. Unpaid parental leave, again, is up to 18 weeks. So again, they could ask that from day one. You've got the SSP removing the lower earnings limit and waiting period. So going back to what we said before, SSP is paid at a certain rate or a percentage of the average weekly earnings, whichever is lower. It used to be that you had to earn about £125 a week to be able to qualify for SSP. They've removed that limit now, so everyone is able to claim SSP no matter what they earn. It'll be obviously worked out based on their earnings. If it's below, whichever is the lower of the 80% or the £123 a week, and the waiting period, which I've mentioned before, which used to be 3 days, has now been abolished. So that is again day one SSP is paid. There's not this 3-day waiting period. There's a lot on there, as you can see, and like I said, I'm not going to go through everything, but what I will say is if you are an employer, please make sure and your employment contracts and your employee handbooks are up to date, because there's one I'm coming up to, which is, or there's a few that I'm coming up to, that could really hurt business with reference to the rules that are coming into place. We are not a HR company, I will put that out there. If you have one, and speak to them about making sure that your employee handbook is up to date, because you don't want to be caught out with these rule changes. And these companies that you can pay to do this will keep you up to date. They will make the changes as necessary as they come in. They will give you the new rules and they will update your handbooks. But so please do check with your HR company if you've got one. If you haven't, please get in contact. We can put you in touch with someone, and then they can go through it. They can look at your contracts. They can look at your handbook, health and safety, fire risk. They can do the whole lot, so you're not falling foul of any rule changes with reference to employment law. The ones I want to talk about now, which are going to be very prevalent for small businesses, because it's the thing that hurts small businesses a lot. So as you can see, the top one is Employment Tribunal time limits coming in from October 26. Now, what this means is Employment Tribunal time limits increase from 3 months to 6 months. So what it used to be is an employee had 3 months to initiate a tribunal. Then that's now been increased to 6 months. So they have 6 months from the date that they've been let go or they've been dismissed to launch a tribunal for unfair, discriminatory, whatever it may be. They have 6 months to do it. So just be mindful of that, that's what they have. So again, your HR company will cover you with that. You can see in January 2027, reduction of unfair dismissal qualifying period to 6 months. So what it used to be is to get unfair dismissal, you used to have 2 years worth of service. That's been cut to 6 months. So as long as the employee has been there 6 months, they can, and you've dismissed them for whatever reason it may be, and they claim it's an unfair dismissal, as long as they've been there over 6 months, they could take you to a tribunal for unfair dismissal. So please be mindful of that. And that protection comes in from the 1st of January. So if you've employed someone from the 1st of July 2026, as soon as the 1st of January hits, they've got their 6 months protection with reference to unfair dismissal claims. So just be very mindful of that. And the other thing that's the next wording there is uncapping compensatory awards. So what it used to be was there used to be a current cap on tribunal awards, which used to be £118,223 or 1 year's salary, whichever is lower. That now has been taken away. So this could destroy a business with reference to tribunal. So if you go to a tribunal and it's awarded to the employee, there is an uncapped amount that they could be compensated. Obviously, it has to be dependent on what the tribunal is for, but there's no cap with reference to it. So again, it's very, very much allowing. It could destroy a small business in my eyes, because tribunals are very costly as it is. Generally, you would have to settle. As I've seen with a few of our clients, they've had to settle outside of court because they just didn't want to take the chance or anything like that, it go against them. But this can make it unruly costly for people. The last one that I'm going to touch on here is the fire and highway protection. So it comes into place with the unfair dismissal. So what you are not allowed to do is basically say to people, your job's gone, and then rehire them on worse terms. That will be now classed as unfair dismissal, because they're refusing to accept changes to their contract. So if you say that your hours are changed or your rate of pay has changed or anything like that, so they're going on worse terms than what they were hired on, they can refuse it and you cannot get rid of them. So you can't fire them for it, saying that they're not accepting terms of their employment, new terms of employment, and then rehire them on worse terms. That would be classed as unfair dismissal. So you just have to be, this is the protection of employees. There's other ones coming into place with reference to 0-hour contracts being able to be guaranteed a certain amount of hours. There's other things that come into place. You can see there is, over the last two slides, I think there's over 30 new things coming in between 2026 and 2027. So like at the bottom, the introduction of the right to guaranteed hours and the right of reasonable notice and short notice payments. So there's a lot of stuff that is coming into place which can make the unfortunate road of dealing with employees very, very complicated and very, very twisty and windy and stressful. So like I said, I reiterate, if you have a HR company already and you pay for it, speak to them, make sure that they're doing this for you. If not, please let me know. We can then take it from, we can introduce you to people that can obviously go through this with you, and they'll keep you on board and keep you up to date. As I've stated previously, we are not a HR company. So yeah, just that's the real big one that I want to sort of come across with reference to this, because this is going to make employing people a lot more stressful. Next topic we're going to talk about is making tax digital for self-employed and landlords. I have spoken to a number of you already about this. So this is purely for the self-employed people and rental and landlords, individual landlords, not corporate landlords. So from April 2026, self-employed and landlords are going to have to report quarterly their income and expenditure. If they are self-employed and a landlord, it's two separate submissions, which means it's two separate software licenses. And the people that are coming in from April 2026 are people with an income. So this is not profit, this is a purely turnover of exceeding 50K or 50K or more. So that can be a mixture of self-employment, landlord, or one or the other. If one brings you over 50K, then you've got rental property as well, you'd have to report both. The quarterly updates are running from the 1st of April to the 30th of June, need to be filed by the end of July, then July to September filed by the end of October, October to December filed by the end of January, January to March filed by the end of April. All the updates have to be done through software, as I've stated, and we have to have a separate license for self-employment and a separate license for rental property. So like I said, I've talked to a number of you already. This is coming in over a 3-year period. As you can see there, it says April 27, that threshold decreases to 30K turnover, and April 28, that decreases to 20K turnover. So eventually they will get everyone in this. This is again another thing of digitizing the tax system. This is for them. HMRC's wording is that it's to make the tax returns more accurate, but there is different trains of thought. What I'm potentially going to see in the industry is people that do their own tax returns. They'll be doing their own quarterly updates. There is a declaration to do after the fourth update, the fourth quarter, to basically say that the figures you've submitted every quarter are 100% accurate, or there were estimates and here are the actual figures. If people state that it's 100% accurate and then there is a big difference in their actual self-assessment compared to what they've submitted quarterly, HMRC are going to flag that and do an inquiry into that person. So it's very, very important that it's done correctly. HMRC say this is to get more accurate tax returns where people maybe lose expenses through the course of the year. The fact it's reported quarterly, you'd hope that you would have that expense for the 3 months that you did it in. But there is also the flip side of it, that it's going to increase people's tax bills because they're not going to be able to put certain expenditure through that they have done in the past. So this is what's coming into place. This is the big, massive thing that's coming into place from April 2026. And just so everyone is fully aware, this was actually announced 11 years ago as part of their digitising the tax system. This is just the second phase of it. There was 3. The first one was VAT. This is the second. The third is corporation tax, which they've actually just parked at the moment. And they haven't said whether they're going to pick it up again, because corporation tax is the most complicated tax with reference to filings. But right now they've parked it and they can potentially pick it up again. So this is really the big thing, the massive thing that's changing for self-employed and landlords. And like I said, I've spoken to a number of you already. And we've talked about what it's going to look like and how we can help and everything else. If you have any further questions, do not hesitate to get in contact with us with anything that we've talked about today. Do not hesitate to get in contact. The last one that we want to talk about, or I'm going to talk about, is the Renters Reform Bill that's coming in from May 2026. This is again for all you landlords. So they are getting rid of no-fault evictions. So if the tenant is paying their rent on time and there's no actual issues, then the landlord cannot just evict them to say that they want to get the property back. They have to have a reason. And one of those reasons could be that they're looking to sell. But if you are looking to do that, there is actually real strict rules around that now, with reference to looking to sell. So if you basically got a tenant to leave your property, because you're intending to sell the property because you don't want to be a landlord anymore, that's absolutely fine. But you could face the property being empty for 12 months. So what they would say is that you would obviously write to the tenant, I'm looking to sell the property, I need you to vacate. Absolutely fine, that's within your rights to sell. You would then need to potentially evidence, if it comes to if someone questions you on whether you are actually selling, you need to evidence that your intent to sell. So i.e. engaging a estate agent, your Rightmove listing, if that's what they list it on, all that evidence. But if you cannot sell it for say 2 or 3 months and you don't get any viewings and everything else or any offers, you then can't rent it out for another 9 months. And this is to stop the whole premise of getting tenants out to get new tenants in at higher rent. And I'm not sure if you remember, there was a Labour MP that had been calling for this and they got caught doing exactly that. They got rid of the tenant, they said they were going to sell it, and then they re-rented it at a higher rent, and they got absolutely chastised in the Houses of Parliament for it, through Prime Minister question times and all that kind of stuff. So with that, the landlord is then responsible for all costs associated with the property. So that's your utilities, your council tax, everything like that. And depending on the council, if it's an empty property and it's a rental, that might be that it's double council tax, or there might be a license that you need to have. But you'd also might need to get specialist insurance. So a lot of landlord insurances don't cover long periods of the property being unoccupied. Some state 60 to 90 days. If it's longer than that, then the insurance wouldn't be valid. So then what you would need to do is get specialist unoccupied insurance to cover the property with reference to that. Some other things on there, the tenancy structure is now all changing. So instead of having an AST, which runs for 6 to 12 months, they all become periodic, with the tenants being able to give 2 months notice to leave. Rental bidding wars, so landlords and as it states there, cannot encourage or accept higher bids than the listed price. So they can't be putting it down at a lower price to get people really interested, and people then it becomes a bidding war. They're not allowed to do that. Pets and children, this has been in for a while, but this is just sort of formalizing it. Tenants have the right to request pets, and you can't decline a tenant because they have children or they're getting housing benefit. You can't discriminate against them. Standards and safety. So there is a new ombudsman to deal with the private rented sector. So where this is people going to tribunals and stuff like that, there's a new ombudsman to cover that, and mandatory decent home standards. So including AWAB's law. And if you're not entirely sure what AWAB's law is, it was brought in by a child who was 2 years of age that died due to ill repair of a rental property. So more for damp and mold. If a tenant lets you know, you have to inspect it within a certain time period. You have to get the repairs done within a certain time period. And if it's an emergency repair, it has to be done within 24 hours. So this is the standards that landlords are going to be kept to now. You can certainly search out by Google, but in a bit more detail what that law is. But it was based on a 2-year-old child passing away due to ill repair of a property from a landlord. And rent increases are limited to once per year, and they can't be above market rents. They can be challenged. So a tenant can challenge the rental increase, and if it goes through the process of there's not an agreement and it goes to a tribunal, the tenant can pay the old rent while it's still being challenged. So just be mindful of that with reference to rents being increased. If the tenant decides to challenge it and you're going for a tribunal to set it, they are going to pay the old rent until that is done. With reference to additional protections, longer notice periods for evictions. So it would be dependent on the type of eviction that you're doing. So if it's an intent to sell, there'll be a longer period, and there's stricter rules of rent increases. So like I said, you can't do it more than once a year. You can't do it above what market rates are. And then student housing, there's specific grounds for possession at the end of the academic years. There's certain rules you need to go to. So what I would suggest is if you have a rental property and you have a letting agent, they should be making you aware of all of this, but certainly ask them questions around it. How does it affect me? What does it mean? And everything else. If you're looking to sell the property, obviously you're going to need to get moving pretty quickly because it's been in play for a while. And when May comes, it might be harder and you might lose out on a used rental property. Now, as far as I'm aware, you can sell a property with tenants in situ. So you can sell the property with tenants in place. It just means you might get a lower amount of money than you're expecting than if it was an empty property, and it also reduces the market of who's potentially going to buy the property. So that's really around the Renters Reform Bill. That's all we're covering today. We are looking to do another one of these in around June, July, with just some further updates that are coming in and stuff that's happening, because I believe there's a spring statement coming out soon. So it'll be what does that look like with reference to us, and also building towards towards the end of the year as well, with reference to self-assessments and all that kind of stuff. If there's any questions from today, then do not hesitate to get in contact with us if you have any questions around the company's house changes, MTD for self-employed. If you're looking for someone to help with the employment law, please get in contact. We encourage the conversations. We encourage, obviously, dealing with all the aspects of the compliance that are changing. If you run a payroll, and you want to see what it looks like, how much it'll increase your payroll runnings, then just let us know. We can then obviously take it from there. Just one thing on the payroll, just to make employers here aware, we are moving our payroll system to a new cloud system. So the pay slips for employees, they'll have to register, they'll get a link to register to a new site. And there'll be a new smartphone app as well. But there'll be an email going out to those particular people. There'll be an email inviting the employees. So that will start from the 26-27 tax year. Once we've run your last payroll for the year, we'll then migrate you across to the new system, invite everyone. They will still have access to all their old pay slips. So it's not that we're getting rid of them. It's just we're moving to a much more secure and better system with reference to it. It's still with the same company as before. It's still with BrightPay. It's just a better system for us to move forward to. So that's it for today. Thank you everyone for coming. As I mentioned at the start, if you missed part of it or anything like that, this is going up onto our YouTube channel, where you can obviously revisit it if you want to listen to my voice again. And then we'll send an email out with the link to it, so you can obviously then just view it at your leisure and take the points you need to take. But thank you very much for coming, and we'll speak to you soon.